medical expense tax credits. These are non-refundable tax credits. This means that if you're paying for dentistry or you're paying for medication or anything of that nature for a child or a dependent, you're able to go and get a non-refundable tax credit on that. And Robert Land does meet that criteria, and we're going to be talking about how it meets that criteria in just a minute. Now, the medical expense tax credit, it doesn't kick in until you've already claimed about $2,100 for this year, and or 3% of your net family income. And Robert Land, the $42,000 is much more than that. Now, for the medical expense tax credit, you can see right here what you're able to write off, and this applies much to Robert Land: psychological assessment, tutoring, talking books, transportation, and traveling. So that means if you're coming from BC with your child, you'd be able to write off those expenses as well, and you'd be able to write off your child's expenses. Now, you're also able, through the medical expense tax credit, to be able to get a tax credit on Robert Land Academy itself. And the government has been very specific how you're able to do this. The first criteria is the person, the individual, your son, has to be diagnosed as having a learning disability. And again, it's very broad how learning disability is defined under the Income Tax Act, specifically Section 118.2 of the Income Tax Act. And for example, if a child has managerial dysfunction, meaning that they're disorganized, that counts as a learning disability. Now, the government is very peculiar, and I just want to share this with you. And the reason why they're peculiar is, let's say your child has been diagnosed as having attention deficit disorder. That doesn't classify as being able to write off under the medical expense tax credit. But under the sub-definitions of ADD, your managerial dysfunction falls under, and that's a learning disability. So if a qualified individual, being a doctor or a child psychologist, states that the child has a learning disability, then we've got a good place to start. Number two, you also need that professional to actually prescribe Robert Land as a solution. They have to state that the child has a learning disability, the nature of the learning disability, and state that Robert Land is something that's going to assist in helping this child with their learning disability. And number three, the place that they're recommending needs to meet the criteria to support and provide benefit to the child. So for example, a regular private school most likely won't meet the criteria because they're servicing children who don't have special needs and special learning requirements. And now, can you address how Robert Land meets that criteria, like how you assist your clients to get their medical expense tax credits or being able to write off Robert Land as a medical expense?
Well, thank you, Peter. There are a number of ways, and I just want to clarify that Robert Land Academy isn't making a statement that we qualify under CRA's guidelines, because CRA is very clear that they evaluate every claim individually. So it's up to their interpretation. But what we do here at the school is we'll provide a letter on request to parents that outlines the specific program that meets the needs of that particular boy. And really, we're talking about a holistic program, a milieu, if you will, around our structure, around our discipline, around our staff training, our inclusion of nurse practitioners, RNs, the access to psychologists, those types of things. And all of that will be in the letter that we can provide to parents if they're going to make any one of these claims. So I hope that helps, Peter.
That's perfect. Thank you so much, Al. Whoops. I'm trying to go back to the slide. I'm just going to share with you what this number means. If your boy qualifies under this three criteria, meaning he has a learning disability, there's been a professional who's diagnosed the child, who specifically recommended Robert Land, and the child attends Robert Land, if you are in the top tax bracket, you will receive in credit $8,418, non-refundable from the government. That will bring down the cost of the $80,000 down to approximately $71,000. So it's a big help. However, what we're going to address right now happens to be something that will drastically reduce the cost of Robert Land off your gross. And we will also address other programs out there that will also drastically reduce the cost. Health and Welfare Trust. This is a plan that a corporation can create for an employee. It's an employee benefit. And what it is it's a corporation sets it up for an individual. So that means if you have a corporation or you work for a company that will create this for you because you need two separate entities, an individual and a corporation. What you will be able to do is you'll be able to have money put into the Health and Welfare Trust. There'll be a deduction for the corporation and a non-taxable benefit for the individual. And this is key. And I've had individuals over the years create Health and Welfare Trusts who've worked for businesses, who've been cooperative. There's one parent I've dealt with whose child has been at Robert Land for 5 years now, and every year his company puts money in. It's a form of his compensation. Instead of paying him at a salary or bonus, they put into the Health and Welfare Trust, and the individual is able to spend it on Robert Land, so it's a non-taxable benefit. The numbers speak for themselves. I'm just going to go through just a few more slides before I go into Al, can you move that slide? Thank you.
Now, Peter, just if we can pause here for a second, we do have a question, and
yes.
Perhaps this may be answered later on, but the question is, how about tax benefits for children above 16 years of age?
We're going through that right now, and some of them are quite substantial. And what we're addressing right now is the Health and Welfare Trust that actually it dwarfs any of the other benefits that we've shown. So you're going to see some huge benefits that make the child care nothing. Like it's going to be an incidental next to what you're about to see. So I'd like to continue with the Health and Welfare Trust. This is something that's been around since 1986. It's been tested, so you don't have to worry about it being attacked as long as you meet the criteria that a corporation has actually created a Health and Welfare Trust for an employee. So that means you cannot be received. If you own a company, if you're only being paid in dividends, then you do not qualify for this. A Health and Welfare Trust done properly can allow you to write off Robert Land, but not just Robert Land, dentistry, anything else that would qualify under the medical expense tax credit. But what it allows you to do is, one, it allows the expense to go through a lot easier, because when you apply for the medical expense tax credit, what happens is it goes to your local CRA office, and they will probably reject it because they're not dealing with claims of this normally. And they also know that the majority of times that people will just give up, or they'll have to fight it and go and appeal it. If it goes to a Health and Welfare Trust, it's just a line item on the corporate books. And it's if you deal with a trustee who deals with this all the time, they deal directly with Revenue Canada with you. Just going to go, how can we move? Is the slide moving?
Yes, Peter. Just if we can pause here for a second, we do have a question, and
Yes.
The question is, how about tax benefits for children above 16 years of age?
Perfect. So what I'd like to do is just go over the numbers with you. Remember, I was sharing with you before that with the with the medical expense tax credit, you were receiving, if you were in the top tax bracket, about $8,400 back in taxes. So that would bring the gross cost, if you were in the top tax bracket, down to approximately $71,000. But if you set up a health and welfare trust where the company puts money into the trust on your behalf, and it pays directly for all the costs for Robert Land Academy, you can see how drastically the cost goes on the gross. And it's a corporate deduction. So the cost of the school is $42,000. There is an administration fee of approximately $4,200. The Ontario government charges a premium tax. There's a federal tax that is placed on top of this. So the total cost is about $48,000. You can see that's a drastic decrease from the $71,000 with the medical expense tax credit. And the headache is a lot less because the trustee who deals with this, who deals with thousands and thousands of these types of plans, they deal directly with Revenue Canada, so you don't have to worry about those rejection letters. But as long as everything is properly documented, then there's not going to be a problem. How can we move this slide? So let's recap what we've gone over so far with the child care expense deduction, the medical expense tax credit, and the health and welfare trust. The cost of Robert Land for this year after tax is approximately $42,000. How can we move to the next slide? That means if you're in the top tax bracket and you have no deduction whatsoever in the province of Ontario, and I'm just using Ontario, you would have to earn approximately $80,000. So let's recap this. Can we move to the next slide, Al? So you can see if all you are afforded is if you have no deductions, and you don't have a medical expense tax credit, or you don't do the health and welfare trust, or you don't have the child care expenses, Robert Land, the real cost if you're in the top tax bracket is $80,000. If you have a child under the age of 16 and you're able to get the child care expense deduction, the true cost of Robert Land is $76,000. If all you do is apply for the medical expense tax credit, the cost of Robert Land is going to be $71,582. And if you set up the health and welfare trust properly, the cost of Robert Land, the gross cost, is going to be $48,544. Now, what we're going to do is we're going to talk about some of the other things that you can do, because if you spend the time to get the proper documentation for your son to go to Robert Land as being listed as having some type of learning disability, there's a lot of government benefits that you can receive. What we've talked about right now is just reducing the nut, the $80,000. But now we're going to be talking about how you can actually receive money from the government by sending your boy to Robert Land and having the proper documentation. And this is where I was mentioning earlier that the first year of Robert Land, under the right circumstances, could be free.